What's up, team? It's Ruben from TGE, and in this video, I want to discuss about the fastest path to growing a 10K trading account. Okay, and this message or this topic is really just for the traders who want to grow it using only trading stocks alone. Okay, this is a common problem that I see, and one that many traders struggle with because they're not seeing the results that they want. Essentially, anybody that's trading in general, they want to make money. But traders with a $10,000 account struggling to grow it using stocks, that's a big problem. You're gonna take a while. So I said here, if you're trying to trade stocks for short-term gains, you're playing a longer game than you think. The reality is, trading stocks profitably often requires 3 to 6 months swing trading approach. They're not quick flips. That's why I love option trading so much because it's quicker, and I can have a 3 6 month thesis, but my returns on that option trade is going to be far superior than any stock. Some stocks I think move maybe 10%, maybe 15% for the quarter. You can make 100% return trading options with that type of even thesis. So it's not easier. I'll say that there's more components to it, but the if I'm going to put this much effort into trading, I might as well do it into something that can give me greater returns, right? Um, okay, so I said, so how do you win at swing trading stocks? Well, when first, that's the thing, right? So, like I said, it's a longer game than you think, but if you have to have a 3 to 6 month swing trading approach, they're not quick flips. So, how do you win in this? Well, you have to find companies. One, if you're looking for growth stocks, look for companies that have strong quarter over quarter movements, year over year, small caps, and their revenue growth has to be growing. Their forward guidance has to be growing because that's the main driver of any stock price. It's forward guidance, EPS growth. And then I actually stay here. Understand their forward guidance and whether it's undervalued. So once you know that, then you have to be like, where's the current PE ratio of the company? And then analyze it to past performance and say, okay, based on the current growth that we have, it's undervalued, or based on the current ratio that it's at and how it's going to perform in the future is actually overvalued. So you have to be able to learn how to make that decision. As I recognize the stock move in quarterly cycles because often reaching predefined expected moves. Yeah, so what I'm saying here is that stocks, whether they do well or not, sometimes they just tank. And that's because stocks move in quarterly expected moves, which I've said before in previous videos, like the way you get the expected move is based off the option chain, okay? That's how we do it. And so if you're going to do stuff that requires option chain, you might as well trade options. It just goes back to the reason why I love trading options rather than the equity. So, okay, so how do you find the stock expected move, right? I say the key to identifying when a stock has room to run or is already stretched lies in the quarterly expected move. Okay, so whether it's stretched or not, if it has room or not, you got to find the quarterly expected move. And the way you do this is that you get the at the money call ask price plus the at the money put ask price, and you add them together. And that's for whatever, like let's say the expected the earnings day for a stock is like, we're in February, let's say March. Okay, from here to March, what's the expected move, right? And typically you want to do this for your favorite stocks after the earnings, maybe a week or so after the earnings, when once the implied volatility has cooled down. Okay, because but when you're trying to do this as earnings is coming up close, implied volatility is going to be very huge. Vega is going to increase, and it's going to give you skewed data. So do it when everything has cooled off, typically a week or two after earnings, and then you could just figure out those quarterly expected moves, and then you have a range. Okay. That sum gives you the expected move for that quarter. Okay, or you could just use Gacktron, which is the tool that we use inside TGE Max, and it works wonders. Actually, let me show you guys something. I think I'm sharing my entire screen. Let me see. Um, I hope this works. Let me show you. Okay, every week before the market opens, you can do this with the quarterly, but this is an example. SPY Gextron gives us expected moves that we can get off the application, and we mark it. And you can see this week, SPY literally touched the weekly move. These moves are marked before Monday open. So we get this data, and then we're like, okay, this is the expected move. It gives us ranges. It gives us targets. So this way, we're not trading blindly. I hope you guys were able to see that. I don't know if I was sharing my entire screen, but it literally hit SPY literally hit 589.71. So if we were in a bearish, we could just target the weekly bottom, right? Get a couple weeks out, and you would make a great amount of cash, more returns than the stock. I'll tell you that. Okay, the smarter, more capital efficient approach. Okay, the smarter. What was I trying to say here? Here's the problem with only stock tradings. Oh, this is a headline. Okay, so here's a problem with only trading stocks. If you have a $10,000 account, risking just 1 to 2% per trade means putting down about $100 to $200 per trade. But how much capital do you actually need to make real money trading stocks? You need a lot. You can't. It's more than honestly. You need more than 100 grand to make some sort of meaningful income. Okay, remember, like stocks move in just a few percentages, and to to try to make any serious money, any like livable, like if you're trying to live off of this, it's not enough. You need a better vehicle. Okay. So it's not about it's a lot of it's just the vehicle. Like what vehicle do you want to use to get there? You could use like a minivan or you could get like a Ferrari that's a supercar, which in this case it would be options. That's why options are the better choice for small accounts. I do believe that. Options give you a leverage over 100, not over, a leverage of 100 shares. Okay, so for those who don't know, for a fraction of the cost, for those who don't know about options, it's like you the when you look into the option chain, it'll say it's like a contract costs you $1, but you have to multiply that by 100. Okay, because one contract represents 100 shares. So when it moves, it's like 100. It's like you own 100 shares, but you don't really own the 100 shares. You can risk $100 and potentially turn it into $200 to $300, far outperforming the stock returns because the leverage is higher. Instead of making 2% on an equity trade, an option trade can yield 30 to 50% with the same thesis. So you use the same rules, the same thesis that we use, right? But if the trade moves only 2% up, a 2% move can yield a 30 to 50% return in options. So again, I truly believe that options is the better route and it's more capital efficient. All right, most traders fear options because they think they're too risky, but that's a myth. Trading stocks can be actually riskier if you don't have enough capital to diversify properly. So options let you manage risk while maximizing opportunity. What I mean by that is that stocks cost a lot of money upfront. You need to have a lot of capital. And on top of that, there's not a lot of like strategies with stocks. Like it's just either you buy or you short. It's really just a 50-50 coin toss. But with options, you can hedge, you can create strangles, you can create straddles, you can leverage time decay. Like it's a lot more mature in my opinion. It's got more strategies, which makes it easier, and it costs a fraction of the price of than a stock, right? And you can make money both when the stock moves up, when the stock moves down, when the stock uh, has a lot of implied volatility, and then it crushes. You can make money on theta. There's so many ways to make money with options, and it's a beautiful product in my opinion. If you're serious about growing your account, you need to ask yourself, are you here to make money or just throw money away and hope for the best? That's seriously true because I hear a lot of traders. They're like, it's throwaway money. I would like to do. We're not here to like. We would like to. We want to make money. All right. We want to pay our bills with this kind of money. And I'm not here to like, well, like whatever. No, like we want to make some serious cash. We want to turn this $10,000 into $20,000 and this $20,000 into 30, 40, 50, and 60 and so on. All right. So that's the kind of mindset you need to have when you're trading. If you're here to just like goof around, be like, well, I'll try my best. Like, don't even bother. Like, get out of the game. All right. Those folks, they never win. Are you willing to adapt and use the best tools available or stick to inefficient methods? All right. So these are questions you really have to ask yourself. If you're not in this, if you're really like just like a whatever type of thing, then just stop because you're going to probably lose and you're going to say it's risky and you're going to have a bad image. But the problem is that you just didn't take it seriously enough to make money off of it. And that's a you problem. All right. So I say this because too many traders avoid options out of fear, but in reality, options give you more control, better risk management, and higher potential returns. If you want to grow your 10K account efficiently, consider integrating options into your strategy. It's not just about making money, it's about doing it smartly and sustainably. Okay. So, yes, we want to make money, but we want to do it efficiently. All right. Smartly, not just get like 2-3% returns on the S&P 500. Like if you don't want to like trading requires a lot of like you have to be active. You have to risk manage. You have to do this yourself. To be a trader, you're saying that I can beat the S&P 500. If that is not your mentality, then just put your money in the S&P 500 and forget about it, okay? Because trading is not for the folks that are like, I'll try my best. I'll try to at least come close to the S&P 500. That makes no sense. That mathematically doesn't make any sense. And you're probably going to give yourself a very low probability of even coming out ahead. So if you really want to make money and you have a $10,000 account and you're really trying to maximize, choose the best vehicle to make more, do option trading, learn it, learn how to get the expected move, learn about the Greeks, the option premiums, learn about fundamentals, learn how to risk manage, and then you will be okay. All right. And so that's pretty much it. Like if if you are stuck, if you're like wondering why you're tired of like growing, you're wondering why like your account is growing so slowly and you really want to like speed things up, consider joining TGE Max. I'll put a link down below. Or if you want to use Gextron to figure out the expected move and really like not do a lot of the hard work and just let it do a lot of the heavy lifting for you, book a demo call. I'll put in the link below and I'll just show you how it works. All right. Peace out.